Sorry, my voice is in the background, and I just turned off the video.
No problem.
Yeah, sometimes he's okay.
So, Wayne, are you hosting these on a weekly basis?
Yes, that's right. So that's what my thing, and I try to give my client base or my friends some information about the financial issue and the real estate issue as well. So
Cool.
okay, so it's 2 o'clock. So
Sure.
I think more people will coming, and right now we have like 4 or 5 people is online already. So we can also broadcasting on YouTube. So hopefully we can get more video and yeah. So let's start with our seminar today webinar. So this is all about the make investment. So this is like a very few people know about that. So I think it's a great opportunity to introduce this to our Chinese communities, and this time I start that this is James. It's on the video. Is a co-founder of the Hosper, right?
Hosper Mick, yeah, Hosper
Hosper,
Mortgage.
Hosper Mortgage. So most of time we were using the English, but at the beginning, I think I'd rather to speak in Chinese to give the audience some background information about this mortgage investment and the make itself, how it works, how it's operated, and how get the people safe to the so-called safe investment. That's what I think. Okay,
Yeah, please do.
so I will start with some in Chinese. Okay, so hope James don't feel like uncomfortable. OK，谢谢大家这个参加今天的分享。今天又是个非常好的天气，然后花了大家的这个时间。那么我长话短说，就进入今天的这个主题。那今天呢，我们主要是讲这个 mortgage knowledge。mortgage 的这个 investment， 特别是里边关于make 的这个介绍。我这个后面应该是有个背景音在，我希望就是说可能大家有背景音的话可能会好一点，所以我不知道是不是会听得清楚啊。那这个贷款呢，投资呢，我们有几个非常重要的一个知识点。那我在开始之前呢，跟大家有个介绍。那么首先呢，是关于 LTV 的这个概念。那么 LTV 呢，就是 Loan to Value 的这样子一个缩写。那么它就是说贷款占房价的整个比重是多少。那么 Loan to Value 的概念就是说银行所谓的它的风险值高和低。LTV 越低，就是银行贷款的比重是越小。那么对银行而言，或者对投资者而言，那么它的风险也就会越小。那么如果 LTV 越大，比如说到了95%，那么也就是说投资者或者是买家他拥有的这个资产仅占整个物业价值的5%，那么这个数值是非常的这个有风险非常高的，所以说这个是会在做贷款投资中非常重要的一个数值。另外一个非常重要的就是 appraisal。那么 appraisal 的概念呢，就是说房子会有房子的这个价值，但是呢，作为投资人或者是借款人或者是银行，那么他会自己对这个房屋进行一个估值和估价。那么我们最重要的一个因素就是说对房屋要有一个准确的估价，因为所有的贷款我们计算 LTV， 那么它的 value 就是从这个 appraisal 来的。那么如果它的准确就保证了我们能够得到一个正确的信息，评估它的风险。要不然的话，这个市场会觉得就是可能会比较的，风险会比较大，因为存在着各种各样的一些不确定因素。后面呢是 GDSR、TDSR， 那么这个呢是在一般的在做房屋贷款的时候，会考虑的很重要的一个数字。GDSR 代表的是 Gross Debt Service Ratio， 而 TDS 呢是Total Debt Service Ratio。 那么这两个差别呢， GDSR 的这个情况呢，最主要是说你借款 那每个月还月供吧，那你整个月供占到你整个收入的百分比，那么这个呢就是GDS 那么差不多是在39%，目前的一个比较标准的这样子的数字上限值吧。另外一个 TDSR 呢，就是说除了贷款以外，你还有其他的个人债务，比如说信用卡账，比如说您的这个车贷，或者是 student loan， 那么这些，或者是你另外还有，比如说你有一些line of credit 的这种贷款的这个每个月还款，那么这个的债务的这个数字加上你的每个月贷款的月供，那么就形成了一个 total debt 的这样子一个内容，那么它的上限呢是44%。另外呢，就是说几个在做贷款投资时，您作为放贷人，那么您要注重的几个重要的内容呢，就是credit， 就是这个人的信用分数或者信用是如何的，就是借款人的信用。那另外的话就是您的 capacity， 就是这个借款人的他的这个还款能力，包括他的资金，包括就是说他的首付的那部分的资金的来源。大小或者是它的稳定度，另外的话就是这个人的人品是什么样子一个人的这种还款有没有还款的这种习惯啊，或者是这个比较是那种按时还款的这种人。另外呢，最重要的是 collateral， 在这个情况里面 collateral 就是这个房子的本身，那么它是作为整个房子的这个抵押，是您是在这个产权上的，所以这个呢是作为贷款投资中很重要的一个因素。那么这右边的这个图呢，是就是目前整个加拿大人均的这个贷款的这个增长。那么可以看到，那么贷款的这个信用的这个增长是非常的快的，一直是在19年以后是处于一个上升的这个趋势，也就是更多的人现在选择做贷款。OK， 那么后面我们介绍一个这个贷款的大概的流程或者是大概的一个情况。我们刚才说了，假设我们现在是有一个100万的这个房子，那么评估的价值是100万，那么银行是作为第一贷款，它贷给了这个人是50万的这个贷款，对吧？那么这个呢，它就是要 就是第一贷款，也就是说 first mortgage， $500,000 is first mortgage。那么后面呢，如果是他才从其他地方再进行另外一个贷款，比如说是找个人投资者，或者是找这个其他的这个银行或者金融机构，那么他获得的这个资产呢，就是借来30万，这个叫 second mortgage， 也就是第二贷款。那么这种情况下，整个房子的 LTV loan to value 就是 80%， 也就是说80%，它是借来的。那么他这个人，屋主本人呢是有20%的资金，也就是20万是自有资金。那如果出现拍卖的情况下，假设这个房子拍卖掉了100万，那他还不起月供了嘛？那么他拍下来100万，那么首先拿来的这个钱的100万是先还了第一贷款，因为他是按照顺序排 A 和 B， 第一和第二，所以第一贷款人他拿到了50万，后面他再还给第二贷款人的30万，这样子他80万是全部还清了，这是在达到价格的这个情况下。那么如果这个拍卖我们假设只拍到了75万，那个时候的情况是怎么样呢？那个时候的情况就是先还了first mortgage 的50万以后，那只剩下了25万，那么之后的25万是还给所有都还给第二贷款人，那么也就是25万。所以对 second mortgage 的人，他的风险就在于，当他低于拍卖所得的价格低于 LTV 以后，他损耗的就是减值的这部分就是在第二贷款人身上，那么他就变成了要亏损5万块钱。那在第一种情况下，如果100万的话，那么第一个就是买家那一个或者是屋主的，他自己还能留20万，那么在亏损的情况下，那屋主是1分钱都拿不到，所以呢那个时候就可能进入一个破产的这样子一个情况。 这个就是大概按照，比如说这是第2贷款嘛，那如果是有些人可能上升到第3个贷款、第4个贷款，那么这个就是不断的在自己的这个 collateral 的房产上，就抵押房产上去加上，不断的往下加，那么风险随着往后的延伸，风险是越来越高的，所以相应的你风险就一定要有更高的回报率，才能够使得别人愿意贷钱给你，对吧？那么这种情况下就是形成了一系列的，比如说3贷、4贷，甚至于5贷的这种情况。那么当然这种情况会比较少，但是我们在 Crestpool 的这个案子上就可以看到，它其实已经到了3贷和4贷的这种情况。OK， 那么所以这刚才说的非常重要的2个，一个就是 LTV80%在这 case 上，另一个就是说你的 appraisal 的这个价格要准，所以这2个关键的因素是我们判断一个比较好的一个贷款投资项目的一个标准。那么我们后面再来看一下大概的一个风险和回报。那么这个是大概的一个示意图。首先呢，这是以房子为抵押物的一个投资，也是具有一定安全性的，因为它不是商业的物业，一般是以住宅为主，它是有抵押物的，而不是完全是靠这个信用来获得这个贷款，或者来获得这个借款。一般呢，它的周期是1到3年的这个周期，是作为个人投资的话，那么周期呢相对来说还是适中的，不是像那个 GIC 短期的这种存款流动性比较大或者股票，但是它的周期呢也需要超过1年以上。当然它也有不太好的地方，就是它的流动性相对会差一点，包括它你投入以后需要1到3年的这个锁定期。另外呢，这个你要及时退出来的时候，你急要钱的时候呢，你很难去让这个借款人来还这个钱，因为本身他也是按照这个 schedule 来计划还款的这个方案的，所以这种情况会比较难。回报的方式呢，一般是几种，它主要是每个月它会还利息。之后呢，在1年到期以后呢，它会归还本金。那如果出现比如说他提前还款，因为一般来说第2贷款的利率相对会比较高，那么作为一般正常的借款人的话，他可能觉得我可能要付每个月10几的这个利率，那我现在突然间有一笔比较大的钱来了，那我就把它还掉了，我就不需要了。那这种情况下，它一般会有一些罚金，当然这个罚金不是一定会有的，所以我这边是一个括号，就是可能会有一个，这个是个 bonus， 一下子又出来了额外的一部分的这个利润，所以整体的回报率呢，主要是利息为主。另外呢，它是被动性收入，也就是说您做了投资以后不用去管，那么它就是每个月都会是通过律师，然后把您的这个利息存到您的这个账户上，所以这个呢是一个被动性的收入。那么另外呢，这个是一个合法的，那我相信很多人可能不了解这种情况，那么在国内呢可能认为是高利贷，但这边呢基本上是一个非常正常和合规的这样子一个操作的流程。那么我们看一下大概的流程呢，当然它是不保本的，这个是一个风险了。那么我们看一下大概的这个通过 MIC 的话是怎么样的投资。那么投资者是，比如说我们是投资者，我们有钱，那么把钱投到了一个investment pool， 那么这个呢就是投资的一个资金池。那这个资金池是由谁建立呢？那一般是 MIC 的这样子一个公司，就是 Mortgage Investment Corporation 的这样子公司成立的这样子一个 pool。那么他拿到这些钱以后呢，就去放贷投给 mortgage。那 mortgage 产生的这个 interest 呢，它会作为回报回给这个 investor， 对吧？那么 investor 然后呢，在 mortgage 里面还有一些额外的费用。那么它会是由 MIC 公司来征收，那么它一般会扣掉多少的一个行政费用，那么作为它平时的运作的一个收入。那么最后呢，如果是有额外的一些 profit， 它还是会回到这个 investment 手上。所以通过这样子一个流程呢，就是集中 把大家的资金给集中在了一个资金池以后，可以进行一个分开的这种投资的这样子一个情况。这是大概的这个mortgage investment 的大概的一个流程。我不知道大家有没有什么问题，或者是有什么觉得没有解释清楚，我可以跟大家再讲一下。那么之后呢，我会把时间交给 James。James 呢是 Hosper Mick 的公司的一个 co-founder， 那么他现在主要是负责他的一个投资内容和这个客户关系之类的。大家有没有什么问题可以问一下？那不然的话，我把时间会留给我们的这个主讲人 James。 Okay, James, I think I finished my part regarding some background information, and I think now you are up, so you can share your screen, and you can first introduce yourself, because we have more people coming in the past 5 minutes.
Fantastic. Okay, thanks, Wayne. So appreciate that. So I'll just first, can everybody hear me, and can you see my screen?
Yes, I can.
Okay, fantastic. So Wayne and I have worked together since maybe 2016, and I've been working in private mortgage investing since then. I'm a leader of the Hosper Mortgage Investment Corporation, which I'll be sharing with you today. And my role is predominantly to work with our investors that are contributing funds to our company. And my partners, work on the side that are underwriting the deals and making sure that we're sourcing good quality deals to use your funds to invest into. So without further ado, I'll jump into the presentation here. At a very high level, it's a presentation designed as an introduction to teach people what is a MIC, why do MICs exist, and if they're interested, how can they participate? So I think sensible place to start is to explain what it is. So I know Wayne has given a high level. A little bit of commentary I'll add on would just be that this is something that was designed by the Canadian government in the 70s as a response to government concern that there wasn't enough mortgage options for Canadians. So they were worried that banks wouldn't be able to fund all of the housing mortgage needs that Canadians had, and that we have seen a resurgence of that in recent years, and MICs have become increasingly popular as an alternative to banks to give Canadians, and frequently self-employed Canadians, another option to borrow from in their pursuit of home ownership. So I also saw that chart that Wayne was explaining there that was kind of showing the MIC as a flow-through mechanism to receive interest from borrowers and flow it through as profit to investors. So that was a very, very good diagram. And again, throughout the presentation, you'll probably hear me define a MIC or describe a MIC as a flow-through mechanism. Really, it's a structure that has been set up to allow investors to participate in a large pool of mortgage investments and have the proceeds flowed through to them in a dividend form. So a quick introduction to Hosper Mortgage. So quick overview of our mission statement. So we serve really two bodies. We serve investors, which is my role, and I lead the team that serves investors, and that's what I'm speaking to you about today. So our goal is basically to provide consistent returns, above market returns, in a very hassle-free way. So it shouldn't feel like any work to work with us. It should just be, we basically are providing a mechanism for you to allow your funds to work for you and have your money make money for you. And then to borrowers, Hosper Mortgage is an alternative lender. So we are basically, hopefully, the borrower's first alternative to bank financing. So if they're unable to qualify with a traditional bank, we want them to be coming to us for an interim solution. Okay, so basically our mission is to be the best alternative, both for investors and for borrowers. Because MICs in Canada are regulated by the Ontario Securities Commission, so we are regulated as an investment dealer. There are suitability requirements from a MIC. So I'll go into that really briefly. Basically, at this point, you do have to be a Canadian resident, but over the age of 18. But that is, we can discuss that based on each person's individual scenario. And there is a minimum investment of $50,000 to participate in our MIC. but you can invest in a corporation, you can invest in your personal name, you can invest in registered funds, meaning your RRSP or your TFSA funds. So that's all things to consider, which I'll touch on later in the presentation. And I would just like to present the opportunity, if anybody has questions, please just interrupt me or put in the chat section, or Wayne, you can feel free to interrupt if you see any questions coming in. I would be happy to have this as a dialogue to answer any of your questions rather than just going through the presentation alone. But so I'll put that out there. Really briefly, I'll just touch on this. This is basically investor classification. So if you're listening to this presentation and what I share with you sounds appealing, this sort of investor classification will determine if and how much you'd be permitted to invest. So really briefly, basically it's a spectrum, and this is not our definition. This is a definition by the Ontario Securities Commission of investors, either as non-eligible investors, and this would be a type of individual that perhaps is on a fixed income with not significant savings. Basically, regulators have said, we don't want to allow this type of individual to overly invest in any individual product, all the way down through eligible and accredited investors to basically, if you see on the screen here, the higher your income and asset levels, the more that regulators are comfortable with you to invest. So essentially, that would be a review that we would do with any prospective interested investor. We would basically, through an intake form that we use, we would gather an understanding of your objectives, your investment objectives, and also your current financial circumstances to be able to tell you and give you advice on, how much you should invest and in what ways. Okay, so that's just a high level kind of brief on the different classifications of investors. And I'll briefly touch on this, just in the sense of in the past, I've worked with Wayne on what we call direct mortgage investing, and Hosper Mortgage is certainly still doing direct mortgage investing. This is a model whereby one investor will give one loan to one person. So basically, they'll be directly secured on title of one property, and it's really more of a one-to-one model. What I'm here to talk about today is the MIC-based approach, which is a portfolio-based approach doing the same thing. So versus doing one direct mortgage investment and you've secured your investment with one property, the MIC is secured by 50 plus properties that are constantly revolving. We're constantly taking on new mortgages and constantly paying out other mortgages. So that provides a lot of efficiency with sort of the revolving nature of the fund. Something else about so I'll get into a bit more details about our fund, but so again, just to finish contrasting there, the fund is nice because all of the mortgages within the fund are typically a one-year term. So the borrowers are borrowing from us for a one-year term, but your investment in the fund continues until you decide to redeem it. So basically, it's kind of like a good investment to set and forget. It's a good investment if you have, funds that you do not intend to use for a few years. You can simply, invest it with our fund. It's fully managed. We'll continue to find new mortgages to put into the fund. And then, each month you basically just receive a dividend that basically your money just makes money for you. So a bit more about, Hosper Mortgage Investment Corporation. So our fund specifically. I do apologize. This slide is about 2 months outdated. So I'm happy to let you know that actually in the last 2 months, we're now over 50 active mortgages. Portfolio value is now at about $10 million. So our fund is in a growth phase right now, and that's part of why I'm happy to present to you through Wayne's forum here, because we are growing and we're open for investment from new investors. So as I mentioned, our portfolio is constantly revolving. So on a monthly basis, we'll have certain loans that are concluding and paying out, and then we're constantly funding new loans as well. I saw earlier Wayne was talking about some of the definitions in mortgage lending and loan to value, or LTV. This is a very important and critical one. So with one thing that we're very, very proud of with our MIC is that we've maintained a very low average loan to value across the portfolio. And furthermore, all of the mortgages in our portfolio are first position mortgages. And first position mortgages are generally always going to be more secure investments because you're basically first in line on title to all of the properties that we've mortgaged. Currently, our loan to value average in the portfolio is a very, very conservative 58% loan to value. In other words, on average in our portfolio, there's more than 40% equity still remaining in the property that is buffering our investment or protecting our investment. In very simple terms, if properties dropped by on average 30%, that would have no immediate negative effect on our fund. It would not result in a loss of the fund because we are so well collateralized. And so that's one thing that our investors like about our fund is just that it's basically a very conservative fund, and that's why our target rate of return is still very impressive 8%, but it's 8% versus 9% because we've decided to be a little bit more cautious, especially in the a little bit of near term where there's some uncertainty in the market. We've set a target return of 8%, which we can comfortably earn for investors with that conservative portfolio that we've worked to build. So I'll pause here. Does anybody have any questions? Let me just see if the chat is. Hang on.
No, it's all good. Just a little bit slower. I think.
Sure.
They might be the first time to hear about this information, so a little bit slower and more detail might help.
Okay. Is there anything you'd like me to repeat, Wayne, or anything I should go over, or just proceed a little bit slower?
You just proceed a bit slower, and I can explain later in Chinese, so it's much easier for them to
Sure,
understand.
no problem. Okay, so currently we're paying dividends on a quarterly basis. In the future, this will be paid on a monthly basis. So again, to reiterate, this is a type of investment that is a cash flowing investment. This type of investment generates basically money on your money. So dividends can be received in two ways. Investors can choose to receive cash dividends, basically, so it will be paid like a direct deposit into your bank account, or you can choose to participate in the dividend reinvestment plan. The dividend reinvestment plan basically pays you in additional shares instead of cash dividends. And the reason that some investors choose this is because if you don't have a need for the funds that are being generated by this investment, the dividends will then compound on top of each other, and you'll just earn with compounding, you'll earn a larger amount each year. So for example, cash dividends would pay out at an annual rate of 8%. When you choose to reinvest the dividends and earn additional shares, those compound each quarter, and your annual return is about 8.25%. So that's a relevant topic. As I just again to reiterate, in the past, since we launched the fund, we've been paying dividends quarterly. Next year, we'll be shifting the model, paying dividends on a monthly basis. So basically, this investment will generate cash on a monthly basis, still the same annual return of 8%, but just paid with more frequency. This investment term is between 1 to 3 years, depending on the situation of the investor. So this is an investment that you are kind of committing to. So that makes it really suitable for people who have money in a corporation, or people who have money in retirement savings, people who have money that they've set aside that they know they won't need in the immediate term, and they just like to set it aside and have that savings generate more income for them. So with Hosper, I would let you know that we are licensed to sell our fund in Ontario. We're licensed through a company called Belco Private Capital. This company is a licensed investment dealer. They're regulated by the Ontario Securities Commission, and they oversee all of our trades to make sure that all new investors have been given the proper disclosure documents, meet the proper suitability requirements, and the investment makes sense for their scenario. So that's done through Belco Private Capital. I myself and one of my Hosper teammates, we're both licensed through Belco. We're both licensed and have our Ontario securities licenses through Belco Private Capital. So we wouldn't have to pass you off to anybody. We can do that full suitability review within our team. So Hosper is led by myself and one of my business partners, Nicholas. We are primarily operating the fund, and we work for the company Hosper Mortgage that is the manager of the fund. So basically making the decisions on, collecting payments, making sure that every property maintains an adequate insurance, assisting borrowers if they need deferrals or if they would like to pay out their mortgage, as well as managing any delinquent mortgages. So if there are mortgages that are in default or missing payments, it's our team that can handle that from a full service perspective. So that should never be a concern of an investor. We're very well equipped to handle that. And I myself personally have funded over 1,500 mortgages. Nicholas, who's been in the industry even longer, he's originated over 4,000 mortgages. So fortunately, we've built up quite a lot of experience in a short amount of time doing these type of mortgage transaction deals. Also sitting on our board of advisors, basically advising the fund is one of our investors and also real estate lawyer that we work with, Jeremy Richardson. I know Wayne is familiar with Jeremy. Jeremy has been a lawyer since 2004. He specializes in mortgages, mortgage transactions, and he's also become an investor of our fund. So he sits on our board as well, just to provide his insights and expertise as a lawyer, real estate lawyer, and then also oversee as an investor. Connie Chu as well, another one of our advisors. She has been in the institutional mortgage space for over 40 years. So we get a lot of insights from her in terms of the institutional programs that are going on and what she's seeing on the institutional markets. And she brings that value to our board of advisors as well. And Connie as well. So Connie as well is an investor. So both of these. So of course, Nicholas and myself as principals of Hosper, we've invested our own funds as well. So we're invested heavily in the fund, but also the board of advisors that we've chosen to participate have also made capital investment as well, basically to ensure that everybody's on the same page and everybody's incentivized the same, whether you're an investor or an employee of Hosper. So to touch on to go in a little bit more detail about the services that we provide, is so from sourcing the deals, that's frankly the most important and most valuable aspect of the work that we do. It's great if you have the money in the fund, but if you don't have adequate deals to invest the money in, it's not worthwhile. So sourcing the deals, so we receive mortgage submissions from over 50 different mortgage brokerages in Ontario. So we're receiving dozens of submissions every day, reviewing those submissions, underwriting those submissions, and offering approvals on the submissions that we think are of good enough quality. I saw Wayne touched on the 5 C's of credit earlier. Those would certainly be some of the things that we're looking at when deciding who to offer a loan to and who to include in our portfolio. We've built a process that makes the real estate closings very easy. It also makes investing very easy for our clients. Everything can be done digitally. Everything is done over, Sign Now and a digital electronic email signing documents. So that's all done very easily. Reporting is done professionally. So on a monthly basis, our investors receive a report which outlines their holdings in the MIC, as well as the performance of the MIC and some updates on the composition of the portfolio. So you're kept in the loop as an investor. Payments are all done electronically as well. We pull payments electronically from borrowers. We disperse payments electronically to investors. It's all done very seamlessly. And any collections effort, so any late payments from borrowers or deferrals from borrowers, we have an in-house collections team that works with those borrowers to find other solutions or make other accommodations. We were extremely tested, of course, during COVID, where a lot of borrowers were unable if they were going to seek deferrals or need special arrangements. And I'm proud to say that we're able to assist a lot of borrowers, making exceptions and allowing them to have additional time to make their payments without a return to the fund, without incurring any losses or reducing our dividend target. We were able to make those exceptions. Any questions at this point, or shall I keep continuing, Wayne?
Yeah, just continue. I think that's noise.
Okay, fantastic. And then, of course, just going into the last and sort of more protection aspects of the things that we do. So every property that is included in our fund has proper home insurance, and we manage that insurance, and we have additional coverages as a manager of mortgages that have blanket insurance coverage. So if anything were to happen to any of the properties we've collateralized, we have coverage and insurance. Likewise, every single mortgage that we fund has title insurance. So we have protection there for investors. And if there were ever any defaults in our fund, we work with the law firm Richardson Law. We take care of any of those mortgage enforcement steps to collect on any delinquent payments or defaulted loans. Okay, we're getting towards the end. This is just from an investor's perspective, why I like to invest in mortgages and why I think many of the investors that I work with find mortgage lending or investing in MICs appealing. So kind of reiterating it again, but it's extremely passive. So once you entered into the investment, you basically don't have to do anything else. You just have to watch the money enter your account, and we take care of everything else. It's very predictable. So unlike the stock market, which is very volatile and you'll see big swings up and down, it's like a trickle. It's a slow trickle where each month your investment generates a little bit of income, and it should be the same amount each month. So it becomes very predictable. It's a very secured investment. All investment in the MICs are secured by real Canadian property, and specifically our MIC is exclusively residential property. So these are single family homes, the type of homes you may look at to buy as investment properties, detached homes, semi-detached homes, some condos, very traditional Canadian housing. And one other nice thing is it's uncorrelated to traditional markets, meaning a big decline in the stock market does not relate to a decline in the value of this investment. It's unrelated, which provides diversification to a prospective investor's investment portfolio. And the way I like to sum it up, I would sum it up by saying investment in mortgages or investment in a MIC is very similar to being a landlord without the extra steps. So you receive monthly income. It's an underlying investment in real estate. You're receiving interest from borrowers instead of rent payments, but you don't have to deal with the headaches of being a landlord. You don't have to deal with borrowers calling you. You don't have to deal with vacancies. You don't have to deal with broken water heaters. You simply just receive the income from the investment in the form of interest. So I think that's a brief overview, and as Wayne mentioned, he will definitely go into more detail and share with you. But I was happy for the opportunity to introduce Hosper, give you an introductory info session on mortgage investments in Ontario. And if what I shared with you is appealing, of course, reach out to Wayne. He'll put you in touch with me, and we can schedule a time for a one-on-one meeting where I can answer any of your specific questions, or also look at your specific circumstances to make recommendations from an investment perspective. So Wayne, I'll pass it back to you, and again, open for questions, but thank you for the opportunity to let me share.
Thank you, James. Yeah, so I think James gave us details information about the MIC and his company, Hosper Mortgage. which I also have investor, make investor on this company as well. So personally, I think this is kind of alternative investment vehicle uh, outside the real estate market, purchasing a house, a condo. So this give you like the predictable income monthly. And on top of that, I think the most important attractive feature is it allows using the RRSP and the TFSA. You know, every year we have a headache of dealing with the tax submission for the CRAs. If we using this investment, putting the RSP or TFSA in the MIG, then there is no tax for now, but deferral deferral tax for the RSP and no tax for TFSA, which is very good. And now you can see 8%. If you don't pay the tax, it's about like 15 to 16%. That's a lot of pre-tax return, so which is very attractive to everybody, I think. So, and this time I think it's we know something different from just a direct invest in the real estate or stock market. So this is an alternative vehicle for everybody. And I just open for the questions. Otherwise, I have some questions for James. So everybody have something in mind?
I can answer any questions. It doesn't have to just be about Hosper. It can be about, mortgages, other companies, investing in mortgages, anything.
Yeah.
If no questions, then that's fine as well.
I think they have a lot of questions, but they have a concern or they don't know what's something they have to ask. They need to ask. Okay, I have a question regarding like some friends have concern about the kind of mortgage investment because of the case of the fortress.
Yes.
So could you have them information as a insider, industry insider?
Sure. So you may have seen Fortress in the news. Essentially, this was a type of called syndicated mortgage investments. So it's similar to a MIC in the sense that investors were investing in property, but it's very different from a MIC in the fact that it wasn't done through a specific MIC structure. So what happened with Fortress was raising money to build large condo buildings. So when a developer wants to build a large condo building, at the beginning, they need financing to finance the architecture costs, the zoning costs, basically they call them soft costs of construction. What happened is that Fortress was presenting these deals to investors based on the end value of the completed project. So imagine you're an investor right now, there's just a hole in the ground, it's just a pit of dirt, but you're lending against the future value of a completed construction project. When the project goes well and everything is completed and the real estate market continues to rise, there's no issues because when it's time to get your money back, the property is built and it's standing and it's worth X amount of $1 million that they said it was going to be worth. What happened and what the big risk is that when the property runs into construction delays or they don't get the proper zoning from the municipal government or the market, the values of the expected value did not reach what they projected, all of this poses significant risk to investors. So there's no denying it was essentially fraud, what this fact that happened with Fortress. They were misrepresenting what investors were actually getting as security. So now to contrast that with a MIC, specifically a MIC that invests in residential properties, all of the collateral that we're holding in our fund is already existing properties. They're completed homes or condo units. We're not financing the construction of projects or development of projects. So it's more secure because you have a known collateral as opposed to a potential future collateral. There were other reasons that there were other things like lack of disclosure and, high fees that were compounded the issue. But at its core, that was basically what the scandal was, and that's how Hosper as a MIC is governed differently and invests in different underlying assets than Fortress, which was doing these development projects, which were called syndicated mortgage investments. So I can obviously go into more detail, but I think that's a high level of the difference.
Okay, that's good. And especially it's different target, right? We are talking about the residential for the MIC, residential and established properties instead of uncertainties on the development projects.
Mm-hmm.
Okay.
I see a question from Kathy that I can answer here. Kathy's asking, is income considered as business income or as capital income? Kathy, income from a MIC is considered interest income. So it is active income. So it is income like, any other income that you earn. And that's where we were talking earlier about leveraging RRSPs and TFSAs to completely mitigate the tax consequences of this income. So at the end of each year for our MIC clients, we prepare a T5 statement. So you receive that automatically. And so for clients investing in a corporation or in their personal name, they'll receive that tax statement. However, for clients that have invested in registered funds, RRSP or TFSA, those accounts would be tax sheltered.
Good. Any other questions? So how is direct investment, mortgage investment at the moment?
How is it? Like, how is the market?
Yeah, just like the individual deals. So I think they might be easier for them to understand, for the audience to understand it, how it works, right?
Yes. So I'll give a bit more background for the audience. So Hosper Mortgage, we are currently managing about $80 million of that spread across roughly 500 mortgages. Okay, so we have 500 mortgages on 500 different properties in Ontario. They could either be first position mortgages, which are traditionally used by borrowers for new home purchases or to refinance an existing property that they own. And first mortgage basically just means they have priority on title. Or occasionally we receive requests from borrowers who already have a bank mortgage. So they already have a mortgage with TD Bank, for example, but they're looking for, a $50,000 or $60,000 loan, also registered on title, but behind TD Bank to consolidate credit card debt or use for other personal needs. So right now we're seeing, and Hosper does we fund about 50 deals per month. Right now, what we're seeing is a big shift into first mortgage financing needs. So a lot of clients are coming to Hosper because either they bought a pre-construction project or they have a property that they'd like to purchase where they assumed they would qualify for bank financing. But because of the recent changes to banks guidelines, which are also compounded by COVID situation, clients are unable to get the bank financing that they expected they would get, and they're coming to us, Hosper, as an alternative. That's been really good for our fund, Hosper MIC, because that's meant that there's more opportunities for deals to approve. So I would say business slowed down a bit in May and June across all of Ontario. Mortgages were 30% down on average across May and June in terms of private lenders were not writing new mortgages. which is understandable. Almost all industries were down while there was an economic shutdown. Now, as we're getting into stage 3 and sort of people are ready to start to resume normal life, if you want to call it, we're seeing an uptick in clients saying, hey, I have this mortgage overdue, or I have these credit card debts, or this other event where I need to now take action, and they're starting to look at their options. And one of their options would be coming to us, Hosper. So yeah, I don't know if that directly answers your question, but we're seeing an upward trend in the amount of submissions that we're getting. And that's important because for every one deal that we fund, we've probably looked at 10 deals to get to that one deal. It's like a big funnel where 10 deals come in, and then we approve only 5 of them and only 3 of them. So it's like a funnel to get down to each of the funded deals.
Okay. So could you talk about that, about if they cannot pay, that the borrower cannot pay the mortgage?
Yes.
So what's going to happen?
Yeah, so this is an important question to understand, but it's an extremely rare situation. Basically, because every loan that we offer is a secured loan, it's secured by the property that is worth more than the amount of the loan. So in Ontario, many people may have heard the term foreclosure. In Ontario, the process is called power of sale. And basically, this is the legal process whereby the lender, so the mortgage lender, sells the property to recover their loaned principal. So in other words, if you had a $500,000 loan on a $1 million property, and the client stops paying, or upon maturity does not pay back the principal, the defined process would allow lawyers to basically go through the steps to list that property on the market. And then when that property sells, the invested principal, the $500,000 loan, of course, would be paid back, plus any interest that's accrued that would also be collected and paid back. But any surplus above and beyond that still goes back to the homeowner, the vendor that is selling the property. So we would assist with that process. We would assist with the communicating with the borrower. Of course, it always starts by trying to work together with compromises and working with them, collecting on a longer period of time. But if necessary, we have the team and the skills able to go through the legal process. However, as I mentioned, it is very, very rare. Mm-hmm. So I myself have done over 1,500 deals. We have gone through the sale process 2 times. So it's happened, we've done it, but it's very rare.
Okay. So as I think back to the 2016-15, we have rules. We not invest in the condominium properties. Is that still the scenario now? The case now?
Can you repeat that question?
I mean, do we start to fund the deal like a condominium, or we don't do the condo?
Okay, so we don't finance the construction of condominium projects, but we can finance individual condo properties, no problem.
Okay.
There's no issue with funding a mortgage secured by a condo would be the very same as a mortgage secured by a detached property. There are some things we need to consider with regards to the health of the condo corporation, maintenance fees of that condo, but there's no restrictions or no negatives to that type of housing stock versus detached or semi-detached.
Okay.
I see another question in the group chat from Sophia. She's asked, is this the second mortgage that caused 2008 crisis in the States? I would say no, that's not, I don't think that they're directly related. What happened in the States that caused, that made the catastrophe as severe as it was basically the bundling and then resale of loans. So basically what happened in the States in 2008 is the people that were giving the loans had no principal risk, because they would just, as soon as they would originate the loan, they would then just sell it off to a third party. So they were basically incentivized to do as many loans as possible, including high risk loans. That's the opposite of where our incentives lie. We're incentivized by doing loans that can pay back and we can recover the principal. Another contrasting comparison is, I told you on average, we have about 40% equity, or in other terms, like 40% down payment for a 60% loan. In 2008, mortgage originators were doing loans with only 1% and 2% down payments. And obviously, if the market changes a little bit, that 1 to 2% can be wiped out completely. So there's very little skin in the game for borrowers with that type of mortgage product, which does not exist in Canada. The majority, even today, with the growth of private mortgage funders like Hosper MIC and other MICs, we still only represent a very small percentage of the overall residential mortgage market. The mortgage market is really dominated in Canada by the main banks, which is another difference between the United States and Canada. We have 5, 6 main banks that do most of the mortgage volume, whereas in the United States, they have hundreds and thousands of smaller credit unions and funders. So it's a bit of a different scenario, but it's certainly a lot of good lessons we could learn from what happened in 2008 and the mortgage crisis that they had.
Okay. Any questions? Let me go through the... So for the MIC, so it says on a minimum is 1 year commitment. So we can get out of the MIC for 1 year?
Yeah, so when funds are invested from an investor, they're then taken into the MIC and then put into a mortgage for 1 year. Mm-hmm. But as I described earlier, there's constantly mortgages that are paying out, and we're constantly funding new mortgages. So we do need the funds to be locked up for a year, because once we receive them, we've deployed them. After that 1 year has elapsed, we just need a redemption request in writing from the investor, and then we'll plan for that redemption. So, for example, if after a year you decide that you'd like to purchase another investment property or what have you, you just need to give us up to 90 days notice so that we can plan to redeem your funds and pay you back. The redemption of your funds happens in a couple ways. So of course, at any given point, all the money that we've taken in from investors is put out into mortgages. So we don't sit on a very high cash balance. However, if you give us the notice or request of redemption, we can either wait for another investor who's wishing to purchase shares and use the incoming funds to pay to basically provide your return of funds. Alternatively, we could wait for a mortgage to mature, and rather than reinvesting the full amount from that mortgage, we could set aside the amount that you've requested redemption for and redeem your shares that way, and basically pay you back and with interest, and then reinvest the rest. Or over time, the fund generates income, and that can also be used to redeem your shares. So it's something that we plan for, but because there's so much activity in the fund, and we now have over 50 mortgages, there is a number of mortgages coming to a conclusion each month, which gives us the opportunity to set aside any capital that you would like to redeem. Also, as I told you, we're in a bit of a growth period, so we're receiving about a net increase of about $500,000 investment each month, which means that we're growing. So any investors that wish to redeem, that's simply offset by the incoming investment in our fund.
Okay. So you put like the investor classification by OSIF, OSC.
OSC, yeah.
So what's the qualification if you want to invest
Yeah,
in
great
Osprey?
question. We should go back to that. I'm going to share my screen again just to make it easier.
Mm-hmm.
So let me just share this. So the minimum basically to be eligible as an investor is one of three criteria. Either you alone earn $75,000 in the last year, like over the last 2 years on average, or when combined with a spouse, have income of $125,000, or you combined with your spouse have net assets of $400,000. You only have to satisfy one of those three criteria. And if you do, you're permitted to invest up to $100,000 in Hosper MIC. If you satisfy the criteria beyond that, so meaning you have assets above 1 million, or your income level is above 200,000, basically you're also still allowed to invest, but you now no longer have a limitation to how much you can invest. So simply put, the more confident that regulators are in your income and asset level, the less restrictions they give you when investing. But at a baseline, $400,000 of net assets, and that can include real estate minus mortgages, or $75,000 income would make someone eligible to participate.
Okay, so everybody can take a look and think and just to see if you are qualified to invest as a MIC, or if you don't qualify, you still can do the individual deal, right?
That's correct.
Yes?
Yeah, that's correct.
So
This is specifically a requirement by the Ontario Securities Commission.
okay. So for the individual ones, hospitals still do that?
Yes, Hosper does still do that. The size of investment that we're looking, so the minimum investment for Hosper MIC is $50,000.
Mm-hmm.
The individual deals tend to be larger than that.
Okay.
So they can be they may be minimums of 100 or more, 100,000 or more, but we are still doing individual deals. So again, to reiterate, Hosper's fund is at about $10 million, but our overall company is managing $80 million. So the vast majority of mortgages that we're managing are still under the direct mortgage method. However, now that we've launched the MIC and we've built a strong track record, most of our new investment is entered into the MIC channel. So certainly direct mortgage deals, we're still doing that. I can still share through Wayne like examples of past deals or future upcoming deals. But for the most part, investors that are looking to get started, I think the MIC makes the most sense because it offers instant diversification. Whereas when you're investing in one deal, you're tied to that one specific property. But certainly, to answer your question, we are absolutely still doing the direct mortgage investments.
Okay, thank you. There is a question from Cassie. How does an individual invest in your company?
Yeah, one moment. I've lost the chat bar here, which I'd like to just get back. So individuals, simply anyone can be onboarded. It doesn't cost you anything, and you're not committing to anything just by sort of signing up with us. Step one is we just need to collect information from a prospective investor. It's a less than 5-minute digital form just to collect your information, contact information, and some brief questions about your financial circumstances. Once we've onboarded you, then we just need to discuss with you and determine what the most suitable investment is. So suitability includes understanding the classifications and eligibility of you as an investor, but also suitability means, well, what are your objectives? How long do you plan to be investing? What's your risk tolerance? And that's where basically my job comes in, to ask those questions, understand what your objectives are, and then match you with an investment that meets those objectives. So onboarding is very easy. If you're interested to learn more, we would just get connected and we would just send you a profile form, which can be done over email. And then from there, we have that conversation or share with you prospective investment opportunities. And as I said earlier, everything can be done remotely. So it can all be done electronically. Or if you're interested, but you would like to, meet us or visit our office, we are going to be opening our office next week. And our office is located at Yonge and St. Clair in Midtown Toronto. And we can have a meeting at the office as well.
Okay. So when I was a mortgage agent, I know the mortgage industry don't allow the e-sign, but right now I think you said it's okay for the mortgage industry.
Yeah. So the mortgage, so DocuSign led the way, getting validated as a legitimate source of. Basically technology has changing. And regulators are realizing that it's as legitimate as a scribble on a piece of paper. So we can accept e-sign, and every time a document is electronically signed, we get a certificate that basically says the timestamp of when it was signed and the IP address where it was signed, and we get a copy of the signed document, and the signer gets a copy in PDF form of the signed document. So in many ways, it's made our job so much more efficient, because when I started working with Wayne, I do remember, we used to send the documents over email. You had to print them, you had to sign them, then you had to scan them. That whole headache has been solved.
That's good. Save a lot of paper and
save a lot of trees. Exactly.
Save the word. Okay. So I think anybody have a kind of questions? I think it's very clear, because I have been in this business for some time, so I know. But
what I'll do is I'll just make my contact information totally available. I'll send it through Wayne, and I also write basically a newsletter each month. So if you want to subscribe, just to kind of stay in the loop, we'll make that happen. That way you'll just get monthly updates from me and Hosper Mortgage that can keep you educated as to what we're doing and what we offer to investors. Happy to be a resource.
Thank you. So, okay, I think nobody has questions. So anybody want me to translate in Chinese for a bit regarding the information?
Please be my guest.
OK， 这个我现在用中文说一下。那么目前来看呢，这个MIC 或者是这个贷款投资呢，本身是一个除了地产以外或者是股票以外的一个比较稳定的，相对比较稳定或者是相对安全的一个产品。那目前我之前投资或者是我管理或者是帮助投资的这些项目呢，主要就集中在安省的这个detached house， 所以刚才我问了一下，他现在的话也会考虑 condo 的这个物业，那主要的是考虑到这个物业的稳定性，就像我之前说的这个评估价值，房屋的评估价值如果准的话，那么就证明你能够用这个类似的价格去卖掉这个房子，一旦出现问题的话，也能够去快速卖掉，来偿还自己的这个本金，那么减少本金的损失。这个是一个估值上面是一个比较标准的。那 condo 最近几年的涨幅其实是蛮稳定的，即使是在疫情期间，也没有出现这个公寓的这个价格。那晚上的话，我会对这个最近的公寓的这个成交啊、价格啊，会做一个介绍，所以也算是插播一下呢。晚上这个第14期的分享会介绍一下地产的这些信息，大家晚上可以再回来去听。那关于这个物业的本身呢，我觉得安省的房价是比较稳定的，所以说衍生出来这个贷款投资呢，也相对来说比较的稳定。那我想呢，我应该是从2015年，当时还是在做贷款经济的时候，就已经了解了这个情况嘛。那15年大家都很清楚，15年、16年房市暴涨，那个时候大家投资这个 second mortgage 的这个热情也非常高。那到了2017年之后呢，那段时间房子不是出现了一个比较大的跌幅吗？但是就我了解或者是我经手的这些 case 而言，基本上没有出现 default， 也就是没有出现过欠款的这个迹象，也就是所有的二代的投资人基本上是安全的。你即使经历了2017年的这个暴跌的这个行情，也是没有出现过大面积就是亏失本金的这个情况。那我因为对房市还是多伦多的房市本身是会有信心，所以我觉得这个风险性相对还是比较的小。那主要是控制好 appraisal 和 LTV 这两个比较关键的，应该说是最关键的因素以后，那么这个风险呢会相对是可控的。所以呢，我就觉得这个是一个比较好的项目。那我本身也投资了这个MIC 的里边的这个投资项目，所以呢，我觉得从回报率和稳定度来说，是一个给你一个比较安心的一个情况，安心的一个投资产品吧。那你可以配置一部分在这上面，特别是你的这个免税的 TFAC 账户和 RSP 账户，因为这种投资你基本上是被动收入就放在那边。等着它有一些回报。当然不会建议你就是放很多在这上面，那么毕竟RSP 本身呢也是有上限的嘛。另外的话，这个虽然说是相对安全，但也是有它的一定的危险性在，对吧？这个所以大家可以按照自己的一个喜好或者是想法来进行一个自己的这个投资的这个规划。另外的话，对于这个投资的这种，刚才他说了，那么对于投资者的他有一定的要求，如果想要投这个 MIC 所谓的贷款投资公司的这种产品的话，它可能会有一个财务上的一个 financial 上的一个资质，它分成了3种，一种是 eligible investor， 就是合格投资人，另外一种 accredited， 那么是合规，另外是 permitted class investor， 那么是更高级别，那么他们对您的资产或者是收入要求会有一些不一样的这个等级，那么它限制了您的投资 MIC 的上限，那您可以根据您自己的情况来进行一个判断。当然你也可以觉得可能暂时不一定上 MIC， 那你也可以有一些 individual 的，就是一单一单的，也就是说它是把您的名字放在产权上，作为银行的等同于银行的一个借款人，所以房子出现任何问题的话，它都可以提出进行一个法拍或者是拍卖的这样一个流程。那这样子来说，对您来说是一个比较安全的一个有抵押物的投资，所以呢，这个是一个它的一个安全保障是来源于此。关于 Hosper 本身呢，他也介绍了一些，那我就不多说了。那么它目前的资产组合里面的 LTV 平均 LTV 呢是57%、58%，那这个呢我就觉得还算是比较稳定。也就是说，如果房价没有跌，就整体房价没有跌40%以上的这种情况下，那基本上您的1年期的这个贷款投资，那相对来说是比较稳定的。那除非市场出现了一个腰斩的这种情况，但现在来看的话，应该是不太可能出现的这种事件。 其他的话我过一下其他的话都是一些基本的情况。那这个 MIC 呢，很多人其实是不了解它的产生的原因，或者是它实际上，在主流社会里面其实是非常流行的。那在整个多伦多这一块呢，可能符合 MIC 的资质的公司呢，也就是近100家。那并不像很多其他的那些公司会比较多，那它是受到那个 OSC 的这种规管，所以也是属于一个合格的、是合法的这种投资公司吧。OK，那我看看还有没有其他的听众是有一些问题，我在这边可以继续让 James 跟大家一起来回答一下，可以用中文说，可以也可以用英文，都行。大家珍惜这个机会，因为像 James 这样子比较专业的，而且是至少是不会太虚的这种讲这些内容的人不多啊。外面很多投资公司的都是讲的非常虚的，我也见过。好吧，是不是大家都没有问题了？So nobody has questions? Okay, so thank you, James. And if we have any inquiries, I will pass the PPT
Please do. Thank you.
to all the registered audience, and they will receive it, and including your contact. And if they have any questions, I think they will contact you directly.
Okay.
I will pass the information if they want me as a middleman. Okay.
Okay. Very good.
Okay. Okay. Thank you. So thank you everybody to attending the webinar for today.
Thank you.
And yeah, thank you, James, for the time.
My pleasure.
Okay. So thank you, everybody.
Bye now.
Have a good weekend. Okay. Bye bye.